All right, welcome, everyone. This is Sharon with Royalty Business Group, your retirement coach diva, and we are on the Royal Nugget Podcast this evening. And I am delighted to have with me this week's guest because it seems like I'm doing them almost every week now, but we're going to slow down because Sharon can't keep up with this. So we have Juan Jai Luckett with Luck Financial Agency. And this young man has a, a plethora of information to share with everyone today. So make sure you are dropping into the chat your comments or questions so Wanjay can respond to them and make sure that he answers them according to the insurance or annuity, the things that we're going to be talking about today. So, Wanjay, thank you so much for being on the Royal Nugget Podcast today.
Thank you so much, Miss Sharon. Thank you. I have to say, when I met you at the Business Expo back in April, I never would have thought that I would be ending up speaking on your podcast. This is one of a dream come true for me, honestly. So I really have to say thank you so much for giving me the time, the space, and the opportunity.
You are very welcome. I mean, you were just impressive to me when you walked up to me and asked me what did I do, and then you asked me did I like what I did, and I was like, well, nobody's really asked me that. So just being you were very um, professional, approachable, and I know that that shows in the work that you do. And you're going to tell us about that. So tell us about Wanjay, and how you got to where you are.
Um, well, that's a loaded question, to be honest with you. I have to say, well, it started back 22 years ago. I was born in DC, born, and then my family moved to Maryland straight after that. We've been in Maryland for most of my life, my entire life actually. And so, growing up, I had like a lot of role models. I knew both my parents' families on all sides, so it was a lot of melting pots of cultures in there. So my family on my mom's side is Jamaican and Caribbean. My dad's side is American. So, growing up, having a Jamaican household and then an American household, the mix was just fantastic, and that kind of built me up over the years, having that access to people, and so it really led me to boiling down what do I want to become. So I have a lot of ambitions. I said I wanted to become, for example, growing up, I watched movies like Iron Man and Spider Man. I wanted to be an inventor because of Tony Stark. He was so brilliant, making things out of nothing, out of a box of scraps. Is one of the movie quotes, right? I wanted to do that one day, and then looking around my family, no one really did that. I don't know who I could follow in that footsteps, or I should make my own path. But it really boiled down to entrepreneurship because my dad, he on my dad's side, we're all entrepreneurs almost. Dang near everybody's got a side business or a side hustle.
Mhm.
So me, I inherited my father's pressure washing company, and I currently pressure wash on the side as well, going to people's homes, cleaning and things of that nature. But I also started a business for myself, and that actually led me into financial services thanks to a friend of mine. So this is crazy. Him and I, growing up, all together through elementary school to present day, right? We lose each other contacts right after high school graduation. It's crazy. He moves away, different state, comes back, gets my number by coincidence, by chance. Somebody else he knew that our mutual friend of ours gave him my number. Calls me up. He's like, "Hey Wanja, I think it's good for you and your family to come check out this workshop I went to. I think it will definitely benefit y'all in the best way possible." And so I went and I saw the workshop, I saw the opportunity, and I said, you know what? I need to do this for my family. And that's kind of the main reason why I actually start businesses is because my family didn't really come from money on my mom's side, on my dad's side either. We all had a lot of struggle growing up. You can tell eating what's it called? Lunch meat, things of that nature. My grandmother had it the worst. She would tell me her stories of Jamaica, walking barefoot on the hot roads, scars and bruises and cuts on her feet, having to preserve her shoes long enough for the school year to last. It was like crazy. I'm like, Grandma, your sacrifice, your dedication to get us here to America, going through that struggle, being sent to London to be a nurse, then sent to America. It's like I should make sure that our family is good, because she was the main patriarch on my mom's side. She pioneered everybody to come to America, and so I wanted to put myself in the best way, financially and absolutely spiritually too, when it comes to this life. And so that's really led me to, of course, helping people within the community save a couple $1,000s, make a couple $1,000s working with me too. We just moved to a brand new space here up in Rockville area. We just moved up here. It's amazing, phenomenal location. I'm looking to help 1,000 families this year protected, help them know about money and finance, and whole nine. That's a little bit about me.
Okay. So what I gathered from what you said, your work ethic came from hearing the stories and being around your family. Your
Oh,
family, your mom's family coming from Jamaica, your grandmother having to do those things, even though she might have had to struggle and sacrifice, but she made it work for her,
for
in
sure.
order for her children and everybody to have a better life. And you're continuing that legacy.
Absolutely. Absolutely.
Yeah, but I'm also hearing that you're trying to create a legacy, right? You have said you inherited your dad's power washing business, which I know now, this time of year is extremely busy because it's warm
Absolutely.
weather. Everybody wants to cook out and they do not want their house or patio or whatever looking dirty or anything. So I'm sure
There
you're
you go.
busy during this time of year. And then what you have as your other business with the financial services.
Yes, ma'am. Yes, ma'am.
Yes.
Um, both are fantastic. Work ethic really came from my dad too. So
Mhm.
my grandmother and my mom's side are the why. My father's side is the action. So my dad had me and my sister, my little sister. We actually used to be at his detail shop down in Atlanta, Maryland, off of 450. If anyone's
Mhm.
familiar, where there's an Enterprise down there.
Mhm.
And me and my sister would go after school to his shop and make phone calls. I would go out there and meet clients. So the reason why I'm so professional is because of my father and
Mhm.
his business that he started for me, and then my uncle too. My late uncle, he had a kennel and like a horse ranch down in Bowie, and
Oh.
so I would see hardworking black men, and I would of course follow their example. And
Mhm.
so he taught me how to speak, how to look people in the eye, how to shake a hand. Do you have a firm handshake? And so um, I got to say that that work ethic has always been instilled in me. It's a seed that was planted by the grace of God and by the glory of God, honestly. So but that's why that's how you see all this professionalism from me, because of my family, both
Yes,
sides.
and if I don't know if our listeners picked up on what you said, that it started 22 years ago. So that means that you're 22 years old right now. And so that is very I'll say unusual for a young man of your age to be in a position that you're in, running two businesses and being able to, your focus is not on you, it's on building that legacy to help your family and your generations to come after you.
Oh, for sure, absolutely.
Yes, yes. So let's get into talking about what we came to talk about, because I know our listeners are interested in learning about the financial services part that you provide. So if you could just give a brief overview of the type of financial services that you provide.
Right. Oh, yeah, absolutely. That's no issue. So my company, we specifically are in life insurance and annuities. We actually help a lot of clients go and families go through that financial steps of increasing cash flow, managing debt, long-term planning, long-term care and disability too. That's a major one. Additional services that we offer as well. That's one of the main goals that we go over when our financial strategies when it comes to our families. And that also means we do term insurance, we do permanent insurance, when it comes to annuities, we do fixed indexed annuities. So an FIA, a fixed indexed annuity, again, wonderful, wonderful product. It's a adjacent to the 401k, 403b, TSP, IRA, traditional things that people are used to. But most people don't know about a fixed index annuity, and so that's where we come in and we educate people on these index products, mainly, but for sure, mainly life insurance, and then we do some financial analysis in there as well.
Okay. And so the name of your business, Luck Financial Service Agency. I know Luck is your part of your last name, but it's also an acronym.
Yes.
So tell us about that.
So how I came up with my business name Luck is because of my the first part of my name is actually used in my father's company. So my dad put JDL pressure washing or power cleaning together. It stands for Juan Jai's Divine Life because I'm his firstborn son. So
Okay.
I say, I might as well follow the same route, see what I can do with half my name and my last name. So I took Luck and I made the acronym Leadership Unites Cultural Knowledge, which it does. It kind of makes sense. So, Luck is a good little, I would say homage to my father. I say just
Okay.
to keep it in the line. So it's true. Leadership does unite cultural knowledge.
Yeah, so that part, the cultural knowledge. So how are you helping make sure that um, persons like yourself, young,
Mm-hmm.
minority males, are becoming educated in financial services?
Absolutely. I would love to go over that. Thank you. I'm so glad you asked that. So the best thing about leadership is that you're an example.
Mhm.
You are an example. So I can't go around here to some of my peers and seem like I'm not knowledgeable in my field. I gotta be held. I'm held accountable by my father. I'm held accountable by men around me. So therefore, I'm that example of what it means to truly want accountability too. So I go around. I talk to everybody. I say, that's why I talk to you. I talk to people at the business expo. Most people didn't even think I was 22. Most people thought I was 30, 29, 28. Like I've been around the block a couple of years, which I have, but it really started with wanting to be a leader. I said, I want to be made the example. And so I go out there and talk to people and I hold people accountable who want it, who really want it. You know what I'm saying?
Mhm.
Not those who say, oh, I just want to get better and yeah, I want to get my life all together. Most people don't know this, but I was 350 pounds. I
Mhm.
dropped 115.
Wow.
I want
Congratulations.
Thank you. I wanted change. I wanted to be held accountable. I wanted to get better. I wanted to make sure I have enough energy to run two businesses in the first place.
Right.
So
Mm-hmm.
the way I really help people, like men of my nature, but people around my age, is I hold them accountable first and foremost. What do you want?
Mm-hmm.
How do you want to get there? Do you have a plan? What
Mm-hmm.
What is your plan? And if I can help you, let me help you by being the best coach I can be to you. By saying this is what you said you want, you're actually not matching it. Something doesn't add up.
Mm.
So I
Yeah.
hope that's the best way I can explain it. I hold people accountable.
Okay. Great. That's great. That's great. And so, when people hear the words like insurance or annuities, and I know most people don't even know what annuities are,
Right.
but when they hear those words, they feel a little overwhelmed or confused. So, how do you explain these tools to them in plain language?
Oh, it's simple. It's simple. So with annuities, I'll start there. So with an annuity, most people do get scared because like, okay, what is that? That's ambiguous. I break it down to them. So a fixed index annuity is basically like getting insurance for your money. You're basically making sure that you are guaranteeing yourself just income for life. It's protecting the thing you really worked hard for the past 40 years. You worked hard for this money. You saved it. You cried. You sacrificed.
Right.
Going long hours. So, hey, your 401k is great. Cool. Again, it's to protect that money you've been saving in your 401k.
Mm.
So I explain it to them, which is pure protection. Like you're insuring your money,
Mm-hmm.
basically. So with an insurance, the same thing. You're protecting your assets, whether that be with term insurance or would that be permanent insurance. You're protecting your assets with term insurance. Anybody who has a mortgage, Anybody who's the sole breadwinner of their family, you need term insurance. It is a great product. All right. It does expire, but it's a great product because God forbid anything happens to you, your family's covered for the rest of their life. Basically, to get the children through school, supplement some income for a time until the significant other or a guardian can step up to take care of them with their income as well. They're from their job. And so basically, and with IULs and things of that nature, it's pretty easy to sell. You can grow money tax-free within an IUL. You're reducing taxes. You're growing assets for your family. You are, and basically, it's not an investment either. It's something you can add on to your investments. Most people, oh, you want me to, man, IUL is the greatest product. No, it's not the greatest thing since sliced bread. Diversify yourself. I explain it to diversify your portfolio. Do not put all your eggs in one basket. Please don't. You're just asking for a world of hurt and pain.
Just a minute, something happened on my side. Okay, I apologize. I hit mute or something on my side and I couldn't hear you, but I know that everybody else could. So it was just me.
And hold on. And Sharon, hold on. I see something here by Jade Clover. She says, do you mentor generations younger than yourself going into being a leader and leading by example? The answer is, Jade, yes, I do. I mentor people who are 18. To get started in my company, you have to be 18 years old. I hold a license to do what I do. And in order to get your license, you must be 18 years old. So I do mentor people or those in the younger generation. I talk to them. I mean, because they're the next after me. Right. A lot of people, I see their children as the investment, or the projected futures. Like because we are inheriting the earth from our parents right now, inheriting the earth from my family. Right. So therefore, they saw the need to hold me accountable, to teach me manners, to teach me how to respect others, how to talk to others. So in that example, I need to make sure I passed on that legacy to the younger generation. Especially when it comes to even teachers or people who have younger kids, they see me as an example. It's crazy. I don't know. It's weird. It might be a guy because most of the parents drop off their kids with me, and they're like, "Yeah, they just absolutely love who you are, Juan Jai, for some reason. I don't know. Like you're a great role model." I said, "Thank you. It's all God, to be honest." And I just teach them something. So I mentor the younger generation. I mentor those who want to be in this space too, if they're 18 and up.
Okay. Well, good. That's good to know. Because I'm sure there are people who are either listening now or be listening in the future that will be like, oh, I need to get in touch with this young man. And I know some other young men that need to be in touch with this young man to glean from. So that's good to know. You mentioned about the protection, right? So I know from personal experience, trying to explain an annuity to anyone is difficult. So most of the time I'll have to say a pension, but there's a difference. Usually a pension might be, or like you mentioned about a 401k, it's for a defined amount of time based on the amount of money that was put into it or whatever. Where an annuity can go for the rest of the person's life and sometimes can be inherited, I'll say, by a family member or something like that. So how do you make sure that you're explaining it in a way for others to understand?
Right. So I run a presentation. When I typically sit down with anybody, I don't care who you are. If you're 18, if you're 20, if you're 56, if you're 60, you're going to sit down with me and go through the same presentation. It is very simple. The information is all right there laid out for me to explain to them, listed them one by one, the benefits and the downsides of having this type of product. I make sure I lay it all out on the table, nothing left out. And so when it comes to annuities and when it comes to specifically explaining to them The benefits, most definitely. I just say it like it is. It's proper. It's principal protection. You go to the government for 40 years for a 401k. Your money's experiencing volatility. It can grow, but you can also lose money as well. So when it comes to an annuity, you experience the growth. No volatility there. It's a growth. So it's protecting your money. Within an annuity as well, you actually get a bonus. Some companies offer a bonus for rolling your money over. They offer you, they're giving you money. They're saying, you know, we're going to keep it safe, we're going to grow it, but we're going to give you an additional bonus. Also, as well, you get a private pension conversion. Like you said, pension is a great way to explain it. It's a check. So with an annuity, when I get my clients, I guarantee them income for life. Your 401k, your TSP, your IRA cannot guarantee you that. It's illegal. They can't. It's in writing. They can't. This isn't a index product. This isn't safe. Your money, you're going to lose money. They can't guarantee that you're going to have that money 10 years, 30 years down the future. Right? And so I go through the steps by step. Like, you also get tax-free rollover. So you're not getting taxed on that rollover. You're not getting taxed on it. Wow. So I'm keeping my money safe. I keep all of it. I'm getting a bonus. And I get income for life? Yes. That sort of makes sense. Why don't I have this sooner? Most people are just not taught about it. Most people are undereducated when it comes to these products. So that's where I really step in. I fill that void and I just educate people. That's explain. Break down step by step.
Yeah, great. That is great. That is great. So you kind of touched on this, but I want you to go a little bit deeper. Like, why is it important for people to think about protection and retirement planning, no matter what stage of life they are or what age they are?
Right. So, like everybody says, the younger you are, the better. Right. The earlier you can do it, the better. Right. And the only reason why you should know this now is so you don't get overworked and underpaid in your life. But also true, if you're undereducated, you can get overtaxed too. That's the biggest thing. Uncle Sam has you getting a 401k, TSP, IRA because he wants his cut. Some people are aware of this. Some people say, you know what, Juan Jai? I actually am aware about these taxes. I'm going to get taxed in the future with my 401k. When I'm about to retire, I pull money out. Yeah. I have a Roth IRA. I have a Roth 401k. Perfect. But what's the downside to that? You're capped on how much you contribute to it. And if you make too much, you don't qualify for it either.
Right.
And I ask most people, do you plan on making an abundant living within your lifetime? Well, yeah, I do. Well, unfortunately, you don't qualify for the Roth IRA. I'm sorry. Because you plan to make too much. But why is that? Everybody had a Roth IRA. Where they're getting taxed now, not later when taxes are typically higher. Who does that benefit? Does it benefit you or Uncle Sam? Benefits Uncle Sam. So you gotta typically, I just say, look, if you can put yourself in a position just to have the knowledge to say, wait, I know I learned about this earlier. You can't get me now. You're gonna be better off than most people.
Right. Yeah. Yeah. You said something about, abundant lifestyle or abundant living. And what came to mind is, for me, a fixed mindset. So let me kind of put things together. When a person retires, at least when I was growing up, and a person retired, they would always say, oh, I'm on a fixed income. I'm on a fixed income. And I thought about that. And one, I don't agree for that in my own life. I try not to have that because my income was fixed when I was working. I had a salary. If you're a salaried employee, then you have a salary. Normally or at times you may be able to do overtime, but Not so much in federal employment. Sometimes you can, but not so much. You have an annual salary, you get increases, so you have a fixed income at that time. Some people have a fixed income, and whatever. But your mindset might be fixed because you're thinking of, oh, I'm only able to go live paycheck to paycheck.
Right.
Or so they can't see beyond that when they're trying to set up protection or things for their family to do, like you're saying you're doing, to create that legacy. They may want it, but their mindset is fixed. And then they'll also limit what they do within themselves, like take a vacation or help to give to other organizations or help other people. How do you help break that fixed mindset?
Great question, by the way. It's really simple. I just ask them questions. I ask the most amount of questions with everyone I sit down with. If I can't know what you want, excuse me, I can't know what you want if I don't ask questions. So, like you say, some people say I may want to have financial legacy, generational wealth, but how does that look like? What does that look like to you? What does generational wealth really look like? I get the person thinking. I get my clients thinking. I must, because the more they can visualize it, the better for them. But the better it is for them to understand that, okay, I want this product, or this can actually help me. It doesn't hurt me. This doesn't take away from me. It actually gives me the freedom of achieving what I really want. So when y'all, excuse me again, I'm sorry. There's some water. If I can get you thinking with the questions I'm asking you, it already starts to break that little fixed mindset. Okay, wait, no. I really want to take my grandchildren on a cruise one day. I want to make sure that they're set up for the rest of their life after I die. I want to leave them something. Okay, how do you get there? I think I'm just going to use what I have in savings and open up some accounts for them. Okay, what else? What else? What more? Okay, where do you want to take them? Where do you want to give them? How much do you want to give them by the time they're gone? Is that, and what you currently saving now, is that enough for you and your grandchildren? No. So how about you put yourself in a position to be a blessing to your family even more? I know what you have now is great, but you want to give them A, B, and C. Does an annuity fit in this plan of yours? How does income for the rest of your life and also an inheritance for your grandchildren, does that work for you as well? Oh, perfect. So let's move forward with an example. I show them, and then sooner or later they start dreaming again. Most people share, they stop dreaming. They think, oh, the end all be all. I got this 401k. I'm good. I got my savings. I couldn't do too much. I had my little job. I was, I'm a manager. I'm administrative now, and I'm done. I'm good. This is all I needed. But when your children share their children, you want to do what's best for them. And then suddenly people are on that fixed mindset. They stop that dream. That dream never comes to reality. And then a cycle starts to begin. A pattern. Get to retirement. Live an easy life. Maybe go back to work. Hopefully I save enough. Maybe go back to work and then bless my grandchildren with what I have. Just what I have. What I can give. You break, but ultimately it starts by asking the right questions.
That's great. Yeah. That's great. That is great. So you said a lot of wonderful things, and one of the things I wanted to kind of go back to is like common mistakes. You mentioned about people are saying, well, I'm good. And I would say, especially like federal employees, because you mentioned TSP several times. So I know you understand what the thrift savings plan is. So federal employees, you know, they start off day one as a permanent employee. They get life insurance coverage. And if you go in young, you're not going to really pay attention to how much they are charging you for this life insurance. But it increases with every time you get a salary increase, then the coverage increases, and then it also can increase with age depending on how much you have. Then you're at retirement, right? And a person could have had like 5 times their salary. They could have all this stuff. And then when they look at it at retirement, they're like, oh, I think I want to keep it. But then they find out how expensive it can be.
Right.
But in the same token, they paid into all these years, right? So how do you work with not just federal employees, but maybe anyone else who, like you mentioned, people might say, oh, I already have some insurance, or I have a 401k, or how do you make sure that what you're doing is not necessarily always replacing it, but supplementing it?
Right. Great question. So to address the life insurance, I already have life insurance through my job, or I'm already covered. That doesn't, in most cases, it doesn't really cover you unless something happens to you on the job. It doesn't really cover you outside of that. So it's really important for you to have your own insurance. And the crazy thing is, too, it doesn't have to increase. It doesn't have to, you don't have to annually renew it. That's what some policies are. Some insurance is you annually renew it. So every maybe 5 years, maybe every 10 years, maybe every 35 years, their policy automatically or annually renews itself. And so therefore your premium, what you're paying into the deposit, goes up. Because again, there's age to consider. Again, you said with most federal employees, salary. So therefore they're going to charge you more. But here, when the clients I work with, I tell them straight up, you get this policy, the carrier I work with, it covers you for 30 years, 20 years. This is the amount of coverage you get. You have the choice to convert that into your own private policy, where insurance does not increase. You're underwritten as if when you first got the policy. That right there alone tells people, okay, wait a minute, stop. I can get this policy. I don't have to annually renew it. And you tell me I can convert it into something where it's permanent, it doesn't expire? Yes. At no charge? No charge. Simple, great, okay, cool. And when it comes to your 401k, when it comes to supplementing that, I tell people this: do not roll over all your money. Don't do it. Because I don't want you to come after me and say, man, one day I moved all my money. It's locked up now for 7 years or something like that. No. I say keep some of your money in your 401k. Keep some money in there. Take like 30% of it or 40% of it, whatever you feel is comfortable, and move over into some place where it's guaranteed safe. Like again, like I said, you diversify your portfolio. You don't put all your eggs in one basket. Don't come after me. So how I supplement that is like, okay, your 401k it's exposed to market loss. It goes with the market too, depending what fund you have it in, right? With the TFP, whatever fund you're investing in. But when it comes to annuity, please consider it as an option for you, because the money that you have in your 401k is finite. Believe it or not, it's finite. It's not going to be there forever. So I noticed this most definitely around a lot of the areas I grew up in. I've seen a lot of individuals who are a little bit more seasoned, a little bit more older. They're pushing carts around. They're at the desk at the Safeway, behind the desk, behind the cashier. Now, the question kind of pegs in your mind, like, what happened? Like, you look like you have great grandchildren. Why are you still working? Wait
a minute there. What does somebody look like that got great grandchildren?
No,
that's another.
Not like that. Like I'm saying, You've been around here. You've been on this earth probably twice my. You're twice my age, 3 times my age. Why are you still working?
We'll talk about that on another conversation.
But it begs the question in my mind: did you what happened? Like, were you bored in retirement? What happened? Yeah, I got bored. Some people say, yeah, I got bored, Juan Jai. Right. Yeah, retirement was too nice. And sometimes the case that is, but most of the time, they relied so much on what they had in their 401k and their savings that they were retired. Then fast forward 2-3 years later, after being retired for some time, they ran out of money. Mm-hmm. They didn't have enough. And so unfortunately, they went back to work, which is unfortunate. So I always say, hey, your 401k is a great product. It's phenomenal. You've been contributing to it through the market crashes and the losses and the up and downs. But there's also another avenue for you. You can guarantee yourself income for the rest of your life. Mm-hmm. You get a private pension. Private. The government can't come after that. It's private. Mm-hmm. Mm-hmm. So in that way, but it's only a portion though. I don't want to don't come after. Just take a portion. Mm-hmm.
That makes sense.
Can't be greedy either.
Right. That makes sense. So let's do this. I want you to say real quick how people can get in touch with you. I know we're going to flash it on the screen, but tell everyone, like, if they wanted to contact you and learn more information or work with you, how could that do that? I know we're going to keep putting it on the screen, but I want you to sell it.
Absolutely. Easiest way to contact me is through my phone number, 240-278-6873. Or you can email me at my personal email too. So I know that who you are and you can give me a little snippet about yourself. And that's one of the best ways you can contact me. There's my little website down there at the bottom. When it comes to my company, you can reach out to me as well. So best way, first and foremost, send me a text, phone number, through my phone number, or give me a call. And then the second way to reach me is basically through my email right there on the screen.
Great. So we have some little bit of time left. Right. And I know this next topic is going to probably take the majority of this time that we have left. And that's kind of it, going over the various types of insurances and that you offer. So, when you shared with me, you mentioned about term, but then you also shared about the universal life insurance and some others with the annuities. So within this time you have, tell me or tell our audience, like, the high level differences in the different ones and their benefits.
Right. So when it comes to insurance, there are like hundreds of products out there. Hundreds, I'm telling you. So I'm going to focus on main 3, actually. So I'm going to focus on main 2, that people really like to compare and go head to head with a lot. And that is term insurance. So term it stands for temporary, y'all. So or terminate. It actually only lasts for a short while of your life. Most people know that. It only for a term of your life. So that's great. Phenomenal product. It protects you within a period of time. Now, it's very cheap too. That's a great thing about it. When you get it earlier, the better. Yes, absolutely. Age does play a factor, but it's typically very, very cheap. I mean, 22-year-old can get $1 million in coverage for less than $60, $55 even. Just off the top of my head, I'm disgusting. They're really healthy, right? Mm-hmm. So they can get 7 figures in coverage at a young age for almost less than your phone bill. It's crazy. Maybe a couple of subscriptions a month. Maybe you can even do more DoorDash just to cover yourself. So, but the downside is it does expire. That's the thing. Most people say, man, I'm paying all this money towards this term policy over the years. I fast forward, years go by, I don't get to see that money back. That's why this is why it's different. Some products, some life insurance carriers offer a product where their term can now be converted into either, now this is the next type of insurance, either a whole life policy or an IUL, index universal life policy. So again, there's whole life and there's index universal life policies. Right now, typically everybody knows about whole life. I get a whole life policy. It's cash value in there, amazing, great benefits, cool, whole life, amazing. But then fast forward, they came out with a new or an adjacent product called the index universal life or a universal life. Again, another type of policy that has cash value. Now, the only thing is with the IUL compared to whole life, you don't have to pay the actual whole life policy your whole life. You don't have to actually pay your IUL for your whole life. Because again, it's an index, it's tracking something. So what it tracks is, for an example, a fund like the S&P 500. Everybody knows what the S&P is. If you don't, the S&P is Stanley & Poor's top 500 rated companies in the world today. That's Tesla, Apple, Microsoft, Nvidia, all these different types of companies, all put into one index. And so the IUL tracks the performance of that growth. It's not a direct tie to it, though. Do not be fooled. It is not a direct tie into what the market does. It does not a direct tie. No. You're leveraging life insurance as a leeway. You're using life insurance as a mirror, not in a direct tie to it. Just wanted to clarify that. If anyone tells you that life index universal life policy is direct tied to the market, it is false. The reason why that being is because within an IUL, you can't lose anything. There's a floor of zero. In most cases, there's a floor of zero. Some companies give a floor of 0.25, but in most cases, it's a floor of zero. You can't lose anything. But you are capped on growth, which most people like to pounce on. Oh, it doesn't grow as much as my mutual fund. Oh, it doesn't grow as much as my 401k, my crypto, my real estate. But the thing is, I'm not here to beat that. An IUL is not here to beat a mutual fund, a stock. It's here to guarantee you, one, you got permanent coverage. Two, your money grows for you tax-free. Three, you get actual, you can actually convert that into a pension too with an IUL. Some companies allow you to do that. Some people don't know that. Your IUL can be converted into your own privatized pension. One of the greatest benefits, living benefits too. Just like a term policy, your term policy does have living benefits with most companies as a free rider. Some companies don't have that, but it's a free rider. So living benefits or LTC long-term care rider. See, God forbid, I can't perform some daily habits. That's driving, maybe that's eating, walking, clothing myself, bathing, brushing my teeth. I can get up to 90% of my death benefit while I'm still alive. It's crazy. It's called life insurance, not death insurance. You're supposed to be still alive.
But most people don't think of it. I mean, in actuality, you're correct, right? But this is like, it's not for our life, not for the person who's insured on. It's usually for the life of our beneficiaries. But you keep going.
Yeah, right. So life insurance, right, guys? Life insurance. I know we're supposed to get a claim when we die. I know, ironic, isn't it? But you can use life insurance while you're still alive. That's why they have different products. That's why they give you the whole life. That's why they made a universal life, an IUL, as a way to grow your money. Because even I'll show you an example. So one in my firm, my company, I sat down with someone. He told me a story. He said, Juan Jai, I actually had a client who was a real estate investor, realtor, great, big old, had properties all throughout Chicago, right? And they said, he told me they had all these assets, but no asset protection when it came to estate taxes. And so when that individual were to pass away, even if most people know you're caught up on the news, what's going on with Michael Jackson's estate? They had to sell part of Michael Jackson's, I believe, some of his records, some of his stock, in order to pay off the estate tax. And so back to that individual, he said, Well, why don't we get you in life insurance trust, or better yet, an irrevocable life insurance trust, an ILIT.
Mhm.
This individual, again, great, built a big empire. Somehow, some way, they had $2 million sitting in an old savings account that they forgot about.
That they forgot about. Who
They
does
forgot
that?
about. I imagine having $2 million you just forgot about,
Yeah,
right? Maybe
yeah,
I'll get to that point. God willing, right? And so
yeah.
one of the individual said, let's take this $2 million, let's put that as a lump sum into a index universal life policy, and then through that in that IUL, boom, it immediately had cash value. Put that into a revocable life insurance, or ILIT, an irrevocable life insurance trust. So when the time comes, maybe you pass away, right? When it comes to estate taxes, it's supposed to what? Get the wealth from the wealthy and divide it to the rest of us.
Mm-hmm.
And so you use that, say, instead of having your family go through the courts and probate and all that, trying to fight for your land and your wealth,
Mm-hmm.
have the courts take what's in that ILIT and pay and use that money and pay that off. Here, you want the estate tax? Don't come from my family's wealth. Here, I have the money stripped right for you. Here you go. Take that instead. One of the many ways you can leverage life insurance to protect your wealth, grow it, sustain it, and advance it.
Mm. Wow. Wow. That was interesting. Like, you did a great job explaining that, because um, it can be confusing
Right.
on what is what and how all that works together. So I appreciate you going through that and explaining it to um, to us, so we'll know like what to do next. How are we supposed to move next, and be able to protect our wealth and what we have, not just for us, because you mentioned about how people might have to go back to work,
Right.
after they retire, but also leaving that legacy, which is, I know, very important to you,
Oh,
as
for sure.
you mentioned before. So, how does someone decide which one to use? How do you help them to decide which one to use of those various tools?
Oh, for sure. Absolutely. So when I sit down with most of my clients, I go through something called a financial lifestyle strategy.
Mm.
Financial lifestyle strategy. It's very simple. We go through there, we list some goals out, we list which ones are important to you out of these 6 steps. We highlight the ones that are most important, and then we go on from there.
Mm.
So, how important is it for you, say, Miss Sharon, for you to buy a new car? How about buying a new home? How about financing college for children? How about savings for unexpected expenses? Is a scale from 1 to 10, 10 being the greatest, one being the lowest? How about alternate income in case of death or disability? How important is that to you on a scale of 1 to 10?
Mm.
And we go through that. Boom. They list out their tens, their ones, their fives. Okay, on to the next. Managing debt. Or, oh, your form. Hey, in the past few couple of years, right? Do you currently have any old 401ks, TSPs, IRAs, 403bs, cryptocurrency, mutual funds, any 757s, anything in there that you want to mention before we continue? Oh yeah, I had an old 401k. My previous employer at Target. Oh, great, cool. Old 401k. Boom, that's a tell for me. Old 401k. They're no longer with that employer. They just have money sitting there. That's a potential annuity. Okay, great. Managing debt. So, hey, Miss Sharon, when it comes to managing debt, it kind of typically comes from the cars that we drive or the places that we live. So, do you currently own or do you rent? Oh, I own. Okay, your mortgage? What's the balance on your mortgage? Okay, boom. What are you contributing to that? Go through it. Okay, I have a $500,000 mortgage. Wow, $500,000. And you have a family. You need that. To me, that's a tell. They need term coverage. They need
Mm.
term insurance. Next up, boom, moving through it. Okay, going down. Oh, our car, auto loans. Do you have any auto loans? Wow. In the event, are you a breadwinner of your family? Yes. Oh, okay, cool. Just because I'm just looking at all your expenses, your debt, you have a mortgage you're paying off, you have credit cards, auto loans, student loans. It sounds like, how does your family? I asked them this question. How does your family plan to pay for all that in the event something, God forbid, something happens to you? GoFundMe. GoFundMe. Do you have any protection? And that leads I lead into the question. I go into an in-depth analysis of what they currently have without seeing like I'm trying to push them. I just want to ask questions.
Right.
The better questions I ask, the more they reveal, the better I can actually help them decide, okay, wait, what's your monthly expenses? What's your breakdown? Okay, you're spending $150 on food, you're entertaining, you're really like going out. Entertainment, $500. Okay. Utilities, gas, okay. Wow. At the end of the day, what's your income? What are you bringing in? Take home after taxes? Okay. So you have some money to play with. There, your discretionary is. I listed it out for them to see. And then at the end, I give them a full recap. Out of the top three, I go back.
Right.
Out of those that we listed here earlier, which three are the most important to you? And I check. Okay, buying a car. Okay, financing college for children, helping aging parents. Okay, boom. I list them. I write it out. I type it out too by my device with me. I type it out for them to see. Okay, and then I ask them straight up, do you feel like you're saving enough for retirement? No. Boom. To the next. Just get them thinking questions.
Right.
And then thereon, I say, okay, this is out of your discretionary. You want to save something for your financial future. What do you feel more comfortable with on a minimum and a maximum basis? What do you feel more comfortable with? Your range. Let's see who we can work with for you. And then from there, I give them, okay, this is your options. And then when they okay, well, you choose for me. What do I need? Okay, well, based off of this, your debt, your income, your mortgage, and then your education, dime. So debt, income, mortgage, education, dime. So a simple way to calculate that. You need at least probably, it's pretty safe to say $1 million in coverage. Or you need this amount in coverage. You need $500,000 in coverage. Going back on that. You don't need that much insurance. It's all good. Or you just need something simple. Or you actually can get IUL. You wanted to invest, you wanted to get more money for them. You wanted to make sure to secure a financial future for your children. Start some little IULs for your children. Or again, I can put you in the right direction. Go start a Vanguard account for them. Go invest for them. And so they'll be like, Mom, Dad, thank you so much for starting this for me earlier on, so I didn't have to struggle with it.
Great.
So answer your question? I know I went a little long there.
Yeah, no, that was fine. That was fine. And so this is my question, because we're gonna wrap up.
Yes, ma'am.
What is one action step that our listeners can take in order to protect themselves and their families today, as well as prepare for retirement and leaving a legacy for tomorrow?
Right. The best action step you can take, and I mean this with a whole heart, is do not be closed-minded when it comes to information. Seek knowledge. It's in the Bible. Seek and ye shall find. If you want financial freedom, if you want to know more about money, if you want to know how to build generational wealth, then seek the knowledge out. Go to a local class. It doesn't have to be me. Go to a local class. Look it up on Facebook. Get into your community. Who's running what, and where can I go to learn about an annuity, about a 401k, maybe even. I don't know what a Roth is. Where can I get the basic financial knowledge, the financial literacy? Where can I learn about arbitrage? Where can I learn about collateral? Where can I go get this? Go seek it out. Do not sit there with this burning desire and do nothing with it. That doesn't do anything for you and your family. It doesn't sitting with your burning desire does not help anybody. It's wasted potential. So my courtesy is, if you know someone or a friend, ask them a question that's in this realm and space. Ask a question. Hey, so and so, what did you do when it came to saving money up for a car? Or what did you do to budget yourself when it comes to making sure you have enough food on the table, but you want to spend a nice night out on the town with your significant other? Or how would you go about budgeting for a cruise or a special trip you want to take? What was the necessary steps that you took to make sure that it wasn't just a one-time thing, but it's something I can do annually with my family or change around so it's comfortable for me financially?
Mm-hmm.
That's one of the best ways. If you go seek out that knowledge, if you go to even one of my local workshops and just sit there and listen in, don't even get the product, don't even indulge yourself in the services, you're only doing yourself something great. You're only putting yourself in a better position to give your family what they want and what they need. So seek out the information first and foremost. That's what I can say to you.
Okay, great. And one thing we also remember, the Bible says you have be around wise counsel, right? So making sure that you're around and getting wise counsel. So being in the amidst those persons like yourself, and you mentioned about coming out. So tell our listeners of any upcoming events. I apologize, I should have asked you about this earlier, but what upcoming events that you might have? I know you have something pretty regularly, so you can share with our audience about that.
Yes. So coming up this Saturday, which is also the weekend of my birthday, this Saturday, I'm hosting an event down in the College Park area at one of the hotels, the the Marriott Hotel down in the College Park area. If you want to RSVP, it is free, but you must RSVP, and that's through me. You can contact me on my phone number here on screen. Text me that you want to reserve a seat and come. It starts at 10 a.m. sharp. There's a whole networking portion. You'll meet there and all the other associates that I work with as well. It's going to be a great, phenomenal event that you should definitely come out to if you're wanting to know more. Again, like I said, put yourself in a position to know more. Seek the information out. And so that's one of the events that's coming up this Saturday. Next Wednesday, I'm also hosting another workshop that's going to be a little bit more intimate with the people that I'm working with up here in Rockville. It's going to start at 7 p.m. That is again, it's free. Just RSVP through my phone number or email, that I can put you on our guest list and reserve you a spot, because seats do fill up quickly for both of them as well. So those are some of the events that I'm hosting this weekend and the next week.
Okay, well, we're going to say a early happy birthday to you for this weekend. I hope you enjoy it and celebrate yourself, and making sure that also people come out on Saturday, June the 20th, and you said at 10 a.m.
10 a.m.
When it starts. All right, in College Park at Marriott. Make sure that you contact Juan Jai at 240-278-6873, so he can put you on the VIP RSVP list and so you can be able to get in for that event in College Park, Maryland on June 20th. And then also, you might want to get up to Rockville, Maryland on June 24th. That's a Wednesday evening, and be able to sit with him and be able to get more information. But just reach out to him, learn more about him and what he's doing. Even if you're not available any of those days, I'm sure he can set aside some time to explain to you about, in more detail, about all the great information that he provided this evening. Because I know that, everybody's different. So you got to talk to them individually to learn about what their needs are in order to be able to assist them. And I'm sure he's looking for business partners as well. So if you're looking to make some extra money, I'm sure he's willing to be that mentor or coach. to get you to where he is and beyond, right?
Absolutely. If you're open to making additional income for yourself, please feel to reach out. As I said,
Awesome.
240-278-6873.
Awesome. Well, Juan Jai, I want to thank you so much again for being my guest on the Royal Nugget Podcast. Um,
Oh,
I'm
pleasure all
sure
mine.
that someone will, I know they're going to reach out. I know you dropped some great nuggets this evening. And again, enjoy your birthday, celebrating yourself. And I look forward to talking to you again soon.
Absolutely. Absolutely. Thank you so much, Ms. Sharon, for the wonderful opportunity to come on your podcast and to speak. Thank you.
Thank you. Thank you, everyone, and you have a great day.
Yeah.